Welcome. It's a pleasure to be here to talk to you all about the solution space. So let me just start by saying we've been hearing all morning, and actually for the last few days, for the whole year since COP, that we have to get companies and countries to be net zero by 2050. And that is the absolute imperative in how do we reduce emissions, how do we get more efficient in our processes. We've talked about the energy sector, the transport sector, the construction sector. But primarily, how do we make sure that those difficult to abate or those impossible to abate emissions are also offset? So we don't want to let you off the hook. You have to get to your science-based targets, your mitigation hierarchy, and reduce those emissions. But when it comes to those really remaining, be it 5% for most sectors or 20% for land use, what are the options that we have to get carbon credits, offsets into the technology and nature-based solution space? We also have to look at how the high integrity and high quality can be ensured for these carbon credits so that we are truly reducing the emissions, but also getting back into investment into nature, because nature and climate are two sides of the same coin. But importantly, having equitable benefit sharing and engagement of local communities and indigenous peoples who live in a lot of these ecosystems. So what we need is significant investment into these projects. We've talked a lot about how you can do carbon capture or direct air capture, which is technological solutions that require investments. But we also have our forests, our mangroves, our peatlands that can absorb and store carbon. Their protection, their restoration, their sustainable use will be critical as part of getting to that solution space. So we need the investment to go into all of these projects. We also need government regulation to ensure that we have Article 6 from COP26 being implemented, corresponding adjustments, nationally determined contributions, all of these terms that are being bandied around. But really, if we do not have local regulation at country level or jurisdiction level that allows for some of these investments, then we will not be able to make the progress that we need. It's all very complex. But you'll be pleased to know that we have three distinguished guests with us today who can answer a lot of these very difficult questions for us. And I'm very pleased to invite at stage with me and virtually, we have David Antonelli, who's the CEO of Verra, which is a leading standards and certification agency for carbon credits and more. Renat Heuberger is the CEO of South Pole, which provides carbon solutions from project development right down to corporate advisory. I believe a unicorn in its own right now, so congratulations for that. And we have Radha Kupali, who's the Managing Director of Impact and Advocacy for New Forests, which manages 1.2 million hectares of forest plantation, carbon projects, and conservation areas in Asia Pacific and the US. So we have people who know what it's like on the ground, but are also engaging at the very highest levels of governance. Renat, let me start with you. So we're here talking, in this investment community. What is the trend in the carbon market today? How are you seeing the demand and the investments play out?
Thanks a lot. So first of all, let me express my gratitude to Temasek and Gen Zero for having us here and for putting together this great event. It's absolutely outstanding to be physically present again and enjoy the excitement that we all have around what's going on at the moment. Let me start by saying I'm on the one side worried, on the other side excited. I'm worried if I look at the clock and I realize, I don't know if you're aware, but we're at the halfway point. The halfway point between the Paris Agreement and 2030. It's exactly June 2022 is exactly the midpoint. And let's be honest with each other. The first half has not been very good. Our team is behind 0-3. And if we really want to win the game 2030, we have to substitute a few players and make sure that we're catching up. The good news, that the reason why I'm excited is, especially now being here in Singapore, the level of activity, the level of knowledge has increased dramatically over the past couple of years. Our company, South Pole, and David and Rana, we've all been around for a long time. We have kicked this off already 20 years ago. That's when South Pole started to invest in first projects to reduce carbon. Over the past 20 years, we have been able to ramp up also, of course, with the certification of Verra and other standards, nearly 1,000 projects across the globe to reduce carbon. And the concept of carbon finance is as simple and as powerful as it has always been. And only now do we start to really understand its strength. If you have a farm in Indonesia or in Malaysia or somewhere, and you would like to convince the farmer to farm differently, for example, plant more trees, use different seedlings and so on. What is the way to finance that? How does the money get there? It's commercially viable, but the farmer needs an upfront payment for that. Here is where carbon markets come in, because by certifying 1 ton of CO2 that this farmer removes for us, this farmer becomes our business partner, and we compensate this farmer for doing that. And that's the power of carbon markets. We have a financial instrument which, talking about investments, which changes the risk-return profile of farming differently. Just to stay with this example, you will talk a lot about other examples like on forests. The same principle happens everywhere in topics of renewables, biogas, waste treatment and all that. Carbon financing changed the investment case because we now can compensate people for removing CO2. And that's very powerful. Luckily, over the past 20 years, we have established a methodological framework which allows us to quantify that carbon, so our market is completely ready. The time for pilot projects, the time for new concept papers is completely over. Everything is here, the technology is here. What we now need is actually very simple. We need demand, we need obligations for companies, we need other companies to voluntarily chip in, we need governments to create carbon systems so that the power of carbon markets can now really scale. And my last point is, let's just remember Mark Carney on this panel just a few hours ago. He mentioned by the end of the decade, we need 1 trillion in additional financing for a just and equitable transition. And so far, carbon markets, as far as I understand or I see, is the only financial instrument that has the capability to provide that scale. So let's stop doing pilots, let's scale this market together.
Thank you. And you've been playing a very instrumental role in scaling the market. So I'm going to stick with you for a minute and ask you a question. What's the demand side? Are you seeing more companies come to you asking for projects? Do they understand what it's like to actually invest or just buy credits? Give us a flavor of what the demand side is looking like.
I always like to use examples for that, but one really funny one, just last night we had dinner with Singapore Sentosa Development Company. I don't know if you've ever taken this Helix.
Yep.
These guys are super committed. They have commissioned a full study to decarbonize, and they're offsetting the remaining emissions. They're using green power and all that. So the whole Helix and all those fun equipment on Sentosa is now climate neutral. And that's just, you know, it's when you talk to them, you can see a combination of pride of doing it, commitment of being part of the solution, and excitement to convey this message to the audience who is visiting Sentosa all the time. So that's a very concrete, tangible example, and we have loads of them across Europe, Asia, America, Australia, even Africa, of more and more companies and individuals who come in and say, I want to be part of this, I want to offset my emissions, and I want to support and finance projects that make a difference. So I really think we're not at the beginning. The wave of excitement around really turning around climate change is really, really tangible. We can feel it every day now.
That's wonderful. I feel better about my weekly Sentosa visit already. But let me turn to you, Radha, just in terms of keeping with that, how does it work on the ground? I mean, New Forest has been a leader in sustainable forestry and carbon credits in Southeast Asia, well, globally, actually. So give us a flavor of what does it actually look like? What are the challenges you're facing on the ground to do these projects that are sequestering large amounts of carbon for us?
Yeah, thank you, Kavitha. And I think I wanted to come back to your introductory remarks that, we will not get to net zero unless we both have a clean energy transition and we have a sustainable land use transition. It is critical for achieving net zero. And when we think about nature-based solutions, there's 3 critical actions that we need. So we need to be protecting our intact lands, forests, grasslands, wetlands. We need to be improving the management of working forest lands, timberlands, agricultural lands, and undertaking hundreds of millions of hectares of reforestation, ecosystem restoration, all around the world. So you ask about challenges. I mean, the challenges are that we have hundreds of millions of farmers, landholders all around the world. So this is getting back to Renat's question about the Indonesian farmer. So much of the finance needs to flow into tropical countries. That's where the institutional capital needs to flow. And we fundamentally need to change the economics of land use. And so this is really where carbon pricing and carbon markets come in. We know that once you start to introduce a carbon price, land use starts tipping quite quickly. So we move from unsustainable agriculture to short rotation forestry, to long rotation forestry, to ecosystem restoration, regenerative agriculture. And ultimately, the higher the carbon price goes, you're managing land for climate change, for carbon sequestration, and sustainable production, so it has to fit in there somewhere. And we already see that in government-regulated markets that carbon pricing is changing land use. So, for example, we're very active in the California carbon market, and California by itself is the 7th or 8th largest economy in the world and has had an emissions trading system with offsets for a number of years. And we've sold something like $250 million worth of carbon credits in that market. We're one of the largest players in that market. And what carbon pricing has done is actually resegmented and changed how we can manage forest lands in the US. We can optimize management for timber and carbon, leading to the protection of carbon stocks and mature temperate forests for 100 years, as well as incentivizing the growth of forests as well. And it's creating economic incentives for forest owners, for Native American tribes to do the right thing. You see that happening in Australia, where 80% of the carbon credits being sold are from nature-based solutions. It's happening in New Zealand, where forestry is a huge part of the climate change policy in that country. So the question is, how do you now bring this into the voluntary markets? And Renat is absolutely right. We need the right policy frameworks, we need the right price signals, and getting the demand side up, and having long-term kind of stable climate policy that's either coming through government or through some of these voluntary frameworks. And I guess it's the last point that I'd make, Kavitha, is that as an institutional investment manager, the reality is that these new price signals are actually starting to drive new investment models as well. We now have institutional investors who have invested in forestry in years past, now looking at carbon as an integral part of an overall forestry investment thesis. We have some people looking at forests as a carbon sink and investing just for the climate mitigation. And now institutional investors looking at carbon finance and project finance. So a lot of the questions that I'm answering for investors is around, how do I understand the policy? What's happening in New Zealand versus Australia versus the voluntary market? How do I make sense of it? What are the risks? How do I understand this policy environment? But that's ultimately now what all of you in the room need to understand and have to start navigating.
So that's a really interesting point, Radha, that you're seeing a lot of the investment come in because of the carbon potential in the management of land and forests that you're looking at. Can you give us a sense of how that investment is actually going to, say, local communities? How are we getting that equitable and just transition?
Yeah, absolutely. So I'll come back to maybe the California example. So you know, in managing forestry assets for timber and carbon, from a commercial perspective, you know, we've invested hundreds of millions of dollars, and we know that if you manage for climate or carbon and forestry, you can add 200 to 400 basis points of return because you have, you know, increasing price of carbon. But we've also entered into partnership models with Native American tribes. So in fact, New Forest registered the very first carbon project in the California market in 2014 with the Yurok tribe in Northern California. And we've done that with tribes in Alaska and other parts of the United States. And literally tens of millions of dollars of carbon revenue is going back to Native communities for managing their lands, for conservation, which is meeting their economic objectives and their cultural objectives. And so that's the potential that we have now, not just there, but in other parts of North America, but in Asia, Africa, Latin America. So it's really important that we start to think about what are these partnership-based models that create that value for farmers, indigenous peoples, local communities to contribute to that just transition.
Thank you. David, I know it's really late where you are, so we appreciate your being here with us. But Verra is really about looking at those standards to really say whether we are getting high integrity, high quality carbon offsets and credits being generated, whether you have the benefits going to communities, whether nature conservation is actually a delivery from those projects. So I wanted to ask you a different question, but let me start with this one first in terms of how are you seeing this high integrity, high quality demand really playing out, and what's the role of standards agency like yours?
Sure. Thank you, Radha, for the gracious introduction, and thank you to the organizers for the invitation to speak, and to Radha and Renat as well for sharing the stage. So, you know, and sorry I can't be there. Would love to be there, but it is late. But you know, this is our life today in the virtual world. I'm fortunate enough to be able to share this time with you, and thanks again. Obviously, the role of standards bodies like Verra is critical, right? Our job really is to ensure that the credit that folks like Radha and Renat are trading have real environmental integrity, and in the end of the day, represent what the tin says that they represent, which is a ton of CO2 equivalent. And that requires a lot of work. It requires a lot of work on the front end to make sure that the accounting frameworks make sense, that they're legitimate, that they're peer reviewed, that they're audited, that they're, you know, follows best scientific practices and standards. And then there's a longer term piece, which I think is really important to consider, which is making sure that all the rules and procedures that we come up with have integrity over time. And that means that there's a constant process for updating and revamping and rethinking our rules to make sure that we continue to follow the best practices and best scientific evidence that continues to come out. So it isn't like you come up with a standard, you put it on the shelf, and then you kind of wait to see what happens. There's a constant effort to kind of, you know, update those rules, but also bring in new methodologies. So it's a very exciting and dynamic market and place to be. If you told me, you know, when I graduated from graduate school, that I would spend a significant part of my life developing rules and procedures, I would have told you you're absolutely crazy. That sounds horribly boring. There's no way I'm going to do that. And yet here I am, right? And that's what I do. And that's what wakes me up and it drives me to work every day and makes me think, wow, we can come up with a better, more rigorous, more robust set of rules and procedures to really help drive finance to really good stuff that happens out there. And as Radha pointed out, you know, at the end of the day, what these projects really do, I always think of the dynamic or the paradigm that we're creating is really kind of a private sector development paradigm. Many of these projects, even the one with the Yurok tribe that Radha described, or the ones that Renat have done throughout the world, are at core, in many ways, development projects. And having the private sector accountability mechanisms built into that so that you ensure you get the outcomes you need. And you know, you're not going to tell a tribe to protect the forest just by saying, hey, build a fence around it. You're actually going to do that effectively if you work with the community to, you know, help them develop economically, help them get resources to build schools and provide education for their communities, or help them, you know, provide the resources to provide to hire local rangers to protect the forest. So there's a whole series of elements that feed into the development of these standards, which are critical, and need to, we're really, when people ask me to describe what we do, we're really in many ways the glue that holds this market together. So if a developer wants to invest in a project, they want to know that they're investing something that in the end of the day is going to have value when they're selling it to a buyer. So that's kind of our role, and we take that very seriously. And I know that some of the other standards bodies do as well. And we, as Bill Winters spoke at the beginning of the session, describing the work of the what was the erstwhile the Task Force for Scaling Voluntary Markets, and is now the Integrity Council for the Voluntary Markets. That's a really important initiative. I know that Bill tends to say that there's a lot of fragmentation and doubt. I actually think that while there is fragmentation, I think that most of the standards in the market today meet a certain threshold level of quality, and that is that we all have rigorous rules to develop accounting methodologies. We all have rigorous rules around who can audit the projects that we certify. We all have an independent registry that prevents double counting and ensures transparency. What is missing is an assessment from a third party that looks at all of our rules and says, okay, that's legitimate. And once that gets done, which is the work of the ICVCM, I think we'll be in a much better spot to be able to have confidence in the standards that are out there, maybe new ones as well, to really give the market confidence so that it can grow and scale to what we need to where it needs to get to.
Thanks, David. And that, working with you on the Integrity Council for the Voluntary Carbon Markets has been, a huge learning experience for me. As you said, we didn't all think that we would be doing all this measurement and accounting, but this is what builds the integrity and the trust in the market. So we actually know that we are having carbon benefits. They are measurable, and all those definitions of no leakage, additionality, benefit sharing, jurisdictional approaches, all of these terms that we now need to come to grips with will make it more robust and have meaningful impact. What I'm really delighted to hear all three of you say was the link between carbon, nature, and people. That we cannot separate these agendas out. The conservation agenda, the development agenda is intrinsically tied into the carbon agenda. That's right. I'm going to switch because all three of you also said that we need the regulatory framework, that we need governments to step up. And David, maybe I'll start with you. We've had COP26, we've had this whole discussion around Article 6, corresponding adjustments, cross-border trade. Can you bring that to life a little? Like what's happening in the compliance market versus the voluntary market? How do we navigate it?
Yeah, it's a fascinating question, right? Because a lot of people talk about this convergence.
You have only 2 minutes to answer, so we don't have, sorry.
Okay, thank you. It's a fascinating question because there's this discussion about convergence between voluntary and compliance markets. And I think the convergence comes in the use of the infrastructure that's available. So what we're starting to see is the development of new regulated markets that are using the infrastructure that has been created in the voluntary space. So right now in Colombia and South Africa, for example, they have carbon taxes where you can use a carbon offset to pay the carbon stack, to pay your carbon liability instead of paying the tax. And they use CDM credits, gold standard credits, and NR credits, VCUs. So I think you're starting to see a convergence of the use of the frameworks. In the end of the day, the markets are going to be very different, right? A compliance market is driven by a regulatory requirement, and a voluntary market is driven by a voluntary ambition by a company. Although I've heard people argue that those voluntary targets aren't really voluntary anymore. Once they're made, they're pretty set in stone, and that's true and that's good. But we still need to see, a huge sector of the economy take on those kinds of targets to really get to where we need to be. And ultimately, what we see as the real sweet spot for the work that we do is if it can complement either government action, meaning regulation, or additional private sector action in the context of companies reducing their own emissions internally and then offsetting the rest. And I think if we can reach that point, we can get to a sweet spot where we can actually have the voluntary market really drive down the impacts of climate change and set us on a pathway to achieving the net zero targets of 2050.
Thanks for that, David. I don't know if Radha, Renat, you wanted to come in on that because you both did mention the role of governments and regulation.
I'm happy to jump in. Let's be very clear. We were talking about the $1 trillion that needs to be unlocked per annum by the end of the decade. Very obviously, voluntary alone is not enough, right? So let's be clear. The key point of voluntary market is to inspire governments. It's to inspire companies, it's to get rolling, to start doing something right today instead of waiting for the rules. I actually, and we have seen this many times, the voluntary market has created, for example, through Vera, the infrastructure that can now also be used for governments to basically create rules for everybody. That's what we need. One thing that worries me a little bit personally is that I feel there is some tendency, especially from governments, to try to reinvent the wheel, to start at square zero and to think completely globally about what we could need. And the thing is, a lot of the infrastructure, a lot of the methodologies, a lot of the frameworks are actually already here. We have spent the past 20 to 30 years developing those tools, like additionality proof. David and I have been around when the very first version of the additionality tool of the CDM was created. I think it was 2004 or 5 or something. We have more than 20 years of knowledge how to do that. So my ask is, please, let's simplify. Let's not reinvent the wheel. Let's use the knowledge and the systems and the tools that we have, the transparency we already have, to build the new markets. Because once again, we are at the halfway mark. We don't have another half to think about everything from scratch. So that would be my ask. Simplify and use as far as possible what we already have and scale, scale, and scale what we have.
Wonderful. Radha, did you want to add to that?
No.
Perfect segue into talking about how we actually scale. So I'm actually looking at some of the questions that come in, and I'm going to start taking some of those. So I think one of the ways to scale is to actually get to, greater areas of work, to work with smallholder farmers rather than just big plantations, to work with smaller organizations that might be doing really good conservation work but are unable to tap into the global market because there is an imbalance of power. And rather, maybe starting with you, in your forestry investment, how are you working to scale that, working with the really smallholders, whether it's from ag or from communities?
Yeah, so maybe Kavitha, I can give an example from what we're doing here in Asia. So we've been investing in sustainable forestry in Asia since 2008, so a very long time. We've made investments in Laos, Malaysia, Indonesia. We also look at Vietnam and Cambodia. And so in having this investment experience, it was very clear to us that not only do we manage forestry assets for sustainable timber plantation, but there's a huge opportunity to engage with communities as well as creating other great environmental outcomes. So tying together some of your questions and some of the things that Governor Carney was saying this morning, so in shaping our most recent investment fund for Asia, which Gen Zero, I have to make a plug, Gen Zero has invested in, we have come with this sustainable landscapes investment thesis, so where we have FSC certified sustainable plantation forestry, but embedded in a landscape where we're also creating climate, community, and biodiversity outcomes. So one way in which we've been trying to tackle this is actually through a blended finance model. So in our most recent fund, we have mainstream institutional capital, such as that from Gen Zero, but we've also brought in capital from impact-oriented investors, which will make up about 10 or 15% of the capital of the fund. And so then the investment thesis of the fund is to embed outgrower schemes, community benefit schemes, agroforestry, alongside habitat restoration and forest conservation at scale into the activities of these commercially active portfolio investments. And then we've also added carbon finance on top of that. So we will have carbon projects associated with longer-term forestry, afforestation, forest conservation, ecosystem restoration, under long-term carbon offtake. So that is really what's going to create, you know, a holistic set of sustainable development outcomes that meet both, you know, rising timber demand in Asia, but is also meeting the kind of the moment around climate and community issues as well. And I would say those are the kinds of innovative models that we need at scale, very practically.
And hopefully long-term sustainable, because you have all the stakeholders integrated
That's exactly
into
right.
that.
That's exactly right.
So David, this is a question which comes to you often, I know, and it's a question that's been asked and voted up, is how do we make sure that these millions of smallholder farmers in the region who can't afford to be certified by Verra or others actually have access to the carbon market? How do we bring them into the fold?
Yeah, it's a really good question. And I may disappoint you in saying that it's really difficult, right? Because in the end of the day, to have a real carbon credit, you have to follow an accounting methodology that takes knowledge and understanding of following, you know, what the rules are. You have to hire an auditor to kind of assess the outcomes and the project. So there are some transaction costs that are just part of the you know, the reality of a carbon market. So it's not like, you know, you can get me to wave a magic wand and say all of a sudden everything's cool and everybody can join and participate. It does require a certain level of rigor and demonstration of that rigor to be able to join the carbon market. Now, that said, there are, you know, we continue to think about how we can streamline our rules. I think with the opportunities that we're seeing with remote sensing and new technology, that should bring down the cost of the verification and the auditing part of that, or even just the MRV. We're currently in the process of automating or digitalizing our methodologies, and that should make that part easier. And of course, a higher price of carbon will result in, you know, turning around the economics around that. So, you know, I think that there's a real opportunity here for small scale you know, farmers and communities, but it also doesn't mean that they're completely excluded from the system, because I think there are mechanisms that can be developed or have already been developed that enable you know, smaller communities that have traditionally not accessed carbon finance to have access to it and reap the benefits from it. And we've seen examples of that throughout the world in projects throughout the world. So it's just also a matter of finding maybe the right partner or the right formula to make it happen.
And you mentioned it, and rather mentioned it, this whole idea of working at landscapes. Does that help with bringing in the smaller smallholders? So is the jurisdictional approach that we're all now talking about, you know, the panacea to all of these problems?
No. You know, it can be. And, you know, and I'll say, I mean, we're very excited about jurisdictional approaches. You know, if they can make them work, that's great. But remember, when you get to a jurisdictional approach, you run into the same problems that we've had for years with delivering benefits to local communities, which is that, you know, government agencies tend to be somewhat inefficient in delivering those services and that support to individual communities. So my hope is that jurisdictional RED programs can actually be built around developing that, but that they combine with private sector individual projects to deliver the benefits to communities. And I think, to me, the sweet spot and the real, you know, holy grail, if you will, for forest conservation is marrying of the two, where you have the jurisdictional program working on the levers of government, the enabling environment that really makes you kind of achieve the reductions at scale, with private sector individual projects that can deliver the benefits to individual communities. If you can marry those and put those two together, I think that's the solution for really making RED plus at scale work.
Can I add to that?
Yes, of course, please.
So, yeah, bringing it back to kind of the commercial reality, right? So I think in Asia right now, you know, oil palm probably goes for $25,000 a hectare. You know, with the complete disruption in supply chains, that's probably the pressure is going up on pricing. In Australia last year, this year before, you know, agricultural land prices are going up by sort of 20% per annum. So if you think about, you know, ecosystem revegetation, the carbon price needs to be at $50, $60, $70, $100 a ton for the economics of land use to compete. So just to put that in perspective, you know, whether you're a farmer in Laos or in Tasmania or, you know, Canada, everyone understands what their bottom line is. And so ultimately, the investment models that we have to develop, in addition to getting the policy frameworks right, the investment models that we deliver have to organize the demand over the long term to deliver that certainty of value back to these individual landholders and farmers. And so it may be that you're thinking about landscapes where we're embedding sustainable forestry, sustainable agriculture, along with kind of carbon finance, or you're trying to figure out, long-term models where you're giving, certainty of 20, 25-year payments for, climate mitigation. So I think that's the switch in thinking that we have to do. It's not that you just build it and they will come, but actually how do you deliver value back to the landholder?
Renat, I'm going to turn to you, but also add a question to that.
Just very shortly, two pieces of good news perhaps to add here. The one is carbon prices are actually increasing. We luckily came out of a long period of an oversupplied market, but the entire oversupply has been cleared out last year, and prices have jumped up. Just 2 weeks ago at the World Economic Forum, we launched a facility for engineered carbon removals, where 5 key companies, global companies, are paying $200 on average per ton to remove carbon. So we have a business case for those guys.
$200?
$200 per ton of removed carbon. So if that's the willingness to pay, we have a case, right? We have a case. So the second piece of good news on David's point, one of the biggest investment priorities of South Pole, of my company, in the next couple of years is exactly this. We want to create global platforms that allow, for example, in every farmer, every planter of mangroves, every provider of efficient rise methane avoidance, to tap into global platforms that we can verify. And that is already happening. For example, we have cook stove platforms, we have water purification platforms, which hundreds of thousands of cook stoves in a number of countries are verified at the same time. So it is absolutely possible already in many fields, and the next couple of years will bring to life a lot of more platforms that allow access to carbon finance for much, much smaller individual projects.
So the question to add to that is, do we have sufficient price transparency to know where the price is, what the price is rewarding? So the co-benefits, the conservation benefits, the climate benefits, the people benefits, do we have sufficient price transparency on that?
Well, luckily, at the moment, there is a huge amount of exchanges coming out. Even Singapore has launched one as well, where you actually can see now prices that are out there. Price transparency is a function of increased volumes. It happened already under the Kyoto Protocol when demand was high. Automatically, of course, exchanges come out. So this problem is solving itself automatically. Last point, perhaps, let's be clear, you need different amount of US dollars to achieve different results. As I mentioned, engineer removals, it's very difficult to get them below $200. But a biogas project or a waste treatment project might still be available for $15. So it is simply physically, you need different price levels to achieve different results. That's also something we have to just keep in mind.
Well, we'll now be hearing shortly about the market exchange. We have just about a minute left, so I'm going to turn to each one of you for a very quick soundbite of what's the one thing you think needs to be done to really get the carbon markets to be efficient and get to the outcome that we want, which is lowering emissions to a 1.5-degree pathway. Radha.
I think all of the discussion that we've had around policy clarity at the local, regional, international level, and long-term institutional capital that is willing to deliver benefits on the ground for a long period of time.
Renat?
My choice would be simplicity. Sometimes the perfect is the enemy of the good. I ask governments to be brave, better launch the rules than to think about the rules forever. We have to get rolling. We have not much time left.
Thank you. David?
I'll go with what appeared in my inbox today, which was the announcement of the Voluntary Carbon Markets Integrity Initiative, which is about clarifying the claims that companies can make. And if we can get clarity and have agreement in respect of what claims companies can make on the back of using carbon credits, and those complement internal reductions, then we hit that sweet spot where carbon offsetting really is helping to avoid those unavoidable emissions today and lead us down the pathway and over time get us to financing those engineered removals that Renat's talking about at scale that we need by 2050.
Thank you. Thank you to all three of you. This is a very long conversation which we spend all our days on, but I think getting some of that insight and some of a flavor of what it feels like on the ground, I think has been very helpful for all of us. Please join me in thanking our panel, and thank you, Renat, Radha, and David for joining us. As the panel walks off, and we wait for the next speakers to join us, which will answer some of the questions that you've raised in terms of what do we do with a carbon market? What does an exchange actually look like? What kind of investments are required, not just on nature-based solutions that we've been talking about, but also technological-based solutions, which may need a higher timeline and a greater investment? How do we get to those transitions to be net zero by 2050? There was a question that was asked also about saying, what's the level of reduction companies need to make? And the Science Based Target Initiative, which is looking at all of these pathways to scale and change, has said that for most sectors, we should be able to reduce emissions by 90 to 95%. So your residual should only be about 5%. On the other hand, if you're looking at a land use sector, which could be agriculture or forestry or plantations, you may not be able to reduce to that level, so you would get to about 80%, with 20% still remaining to be offset. And those offsets, as we said, could come from tech, but could also come from nature-based solutions. The one thought that I will leave you all with is saying that a ton of carbon is not just a ton of carbon, it has numerous impacts in it. And how we develop these projects, how we invest in them, how we work with different communities and different stakeholders will make a difference to whether these are long-term changes or short wins. And we hope that we can all invest collectively in the long term. I'm therefore delighted to be handing off the stage to two friends and colleagues who will take you through what a good market looks like and how here in Singapore a lot of these changes is being made. Frederick Teo is the Managing Director at Temasek, but also the CEO of the newly launched Gen Zero, and Mikael Larsen, CEO of Climate Impact X. Over to you. Thank you.
Hi, Mikael.
Hey, Fred.
Hey, a very good afternoon to everyone. It's going to be a very hard act to follow, four of those very, very distinguished speakers, right?
I agree.
Right. But today, we are going to be talking a little bit around how we can actually create success in a marketplace. So I think as we look at the first slide, we are going into the first part of this discussion, which is really around what makes for a successful carbon services hub and a trading hub, right? So you are in this space now for quite some time. So actually, what makes for a successful market? What makes for a successful hub? And why is Singapore uniquely positioned to play this role as a carbon services hub?
Well, it's a great question, Fred. But before I answer that, I've got to say that coming after Renat, I was a bit worried with his football analogy. I was going to be one of the substitutes. I wasn't quite sure we're going to be making it onto the stage. But it is a good question. What do you need to have a good service carbon hub? I think ultimately it boils down to one thing, the ability to execute. But if I break it down a bit, there's at least three components to this. And I think Singapore has a good chance at all of these three things. First of all, it is to have the right regulatory framework and the right incentives. And if you think about Singapore as a financial hub, we've done this before. We know what it takes. And if you look specifically around carbon, with the introduction of the latest carbon tax and the allowance for carbon credits to work against those carbon taxes, we really set ourselves up well. Secondly, I like to think that Singapore is what I call an unbiased broker. We don't naturally have a lot of demand, we're a small country, and we don't have a lot of supply. So the only incentive we have is to make sure that money channels from one country to another. And then thirdly, you can't get around it, you need the expertise. And part of what we're trying to do, you and I, and many of our partners, is to try and create that.
Absolutely. In fact, if you look at the experiences of the previous set of panelists, they represent different, very important parts of actually an ecosystem, right, that is building. So really, an effective carbon market really depends on having a very credible, high trust, high transparency ecosystem. So actually, in your mind, what makes for a good ecosystem? What are the different component parts of this ecosystem that we are talking about?
Great. I think there are many components to it, but like you, I've been speaking to a lot of people who's aspiring project developers trying to come to market. And there's always three things they always need. They need financing for their projects, they need a place to sell these, and ultimately, as we heard Renat and Rada talk about, they need somebody to help them get them to market. And actually thinking about that, Fred, you and I cover at least a couple of these bullet points. And in the financing space, that's what Gen Zero does. And by the way, congratulations on having the announcement. When I think about what you finance, what are you actually looking to finance right now? And is it all nature-based solutions, or what are the things?
Not really. It cannot just be about nature-based solutions. Because when we think about the broader space around decarbonization, it really requires a holistic approach to think about decarb, right? So even when we initially started on the project for the CIX, it really wasn't about just creating a marketplace, developing credits, getting them traded and selling them. It was really about whether these things could actually accelerate real decarbonization in the economy, right? Yeah. And if you want to think about real decarbonization solutions, we have got to think about technology-based solutions as well. So there are the ones that are perhaps a bit more industrial, technical solutions, the ones that can actually be a little bit more measurable. We are also looking at nature-based solutions, solutions that seek to protect, restore natural ecosystems. And frankly, to some extent, there are many things that we can do with nature, like more sustainable materials can come from our natural environment that will reduce our need to have more extractive types of materials. And ultimately, when we protect the natural environment, we are also generating what we call co-benefits, right, in the industry. For example, uplifting local communities, protecting biodiversity, and things like that. And finally, we need to have a good carbon ecosystem because many of the solutions are going to be a little bit more expensive right now. And if there are functioning carbon markets with proper credits, they can help us to efficiently crowd in funding and lower the price premium associated with all these new solutions. Yeah. So which is why I think at Gen Zero, and I think for many of the other fellow investors, we're looking at things perhaps a little bit more holistically rather than just looking at nature, or technology or carbon credits alone.
Makes sense.
So in your CIX construct, or really in the carbon markets, one of the common things I often hear really is this, are the credits real, right?
Yeah.
How do I know that this is really making a difference? And how do you solve that?
You're right, Fred. In fact, so you know that we've been trying to build free platforms because we want to be both in the primary market and the secondary market. We think we need both of them. And between all of the platforms, I think there's one thing we got to get right, and when I say I mean the entire ecosystem, is this element of trust that eluded us in the first wave of the voluntary carbon market. Right. So when I think about trust, I really think about 4 different things. First of all, it's the trust in the product. They got to be right. And that's going to mean that there's going to be a minimum bar. We heard David and Renat and Rada talk about some of these things before. The secondly is the execution. We hear a lot about these things around double counting and all these types of things. We got to get rid of that. Then thirdly, and perhaps most importantly, we got to make sure that it's the right use, the trust in the use of the product. We got to make sure that these things are not being used to avoid decarbonization, the hard, difficult choices. And then finally, it's about the monitoring, so we make sure that these things actually stay intact. But if I just take it one step further, once we kind of create that layer of trust, ultimately, why do you come to a marketplace and exchange? Yeah. You want to make sure you get access to the right product and at the right price, whether you're a developer or whether you're a buyer. And that's some of the things that I think we're trying to do. If you think about the price things, at this point in time, things are commoditizing, but not right now. And so that's why you've seen us come forward with a couple of the auctions that we have for some of these new types of products for which the price is not obvious. We heard Renat talked about anything from $4 up the way up to, was it $200?
Yep.
And the other thing is the products. And again, we announced a partnership yesterday with Puro, Because one of the things we truly believe is you got to preserve the carbon sinks, nature-based solutions, as you talked about, but we also got to get some of these engineered removals in. And it's the combination of these two, the portfolio of these two, which we believe is going to be attractive to buyers.
So, Mikhail, so in other words, what we are looking at are not just credits from nature-based solutions, but potentially technology credits as well?
Yeah, and I think you need both. Reality is if we don't give incentive to preserve the sinks, we're not going to meet the IPCC goals. We're not going to get to 1.5 degrees. But we also got to get some of these long-term permanent solutions in. And one has a much higher price point. One is more affordable and more available right now. So it's a package of these two, which I think is going to be powerful. And it actually reminds me of a similar situation. I saw the announcement yesterday about the sustainable aviation fuel, and we had a small part to play with it. It was really for you. I see this very similar. So what was that about, sustainable aviation fuel?
Right. So when we were looking at decarbonizing or rather decarbonizing aviation, many of us probably would agree that sustainable aviation fuel is going to be a very important part, certainly of the near-term decarbonization for aviation. The question for us is really, it's expensive. So how do we get it adopted? And more importantly, get it adopted at scale, right, to make a difference. So one of the things that we tried in the first instance was, of course, let's pilot it operationally. Let's just make sure that everything works in terms of the blending, getting into the infrastructure, getting into the planes, making sure that the production facilities are up and everything is okay. But the next part of it is really addressing this price premium, right? And we thought that by being able to create SAF credits out of the actual use, not a theoretical use, but an actual use of SAF, we would be able to then sell it to perhaps corporates, institutions that might want to fundamentally decarbonize their air travel and help to contribute to the kind of like defraying the cost premium of these SAF fuel. And then finally, of course, I think we want to work with marketplaces to be able to try and get some price discovery and getting it done. Now, but before we leave off on this point though, it is very important that we actually have proper certification and accounting for this. Right? So generally speaking, for about every ton of SAF that you use, you generate about maybe three something tons of carbon equivalents. Now, the idea really is that not all SAF fuels are the same when it comes to carbon abatement. While generic, on average, is about 3+ tons. It depends on the kind of fuel, it depends on the production method, it depends on the feedstock to be able to determine the actual carbon abatement. So we need to have a proper process of certifying the SAF credits to make sure that we have proper life cycle accounting of the carbon abatement, and that's also partly what we are doing now with the SAF credits.
And just to give the audience perhaps just an indication of how expensive this is, we're talking about something like $1,000 per ton of jet fuels, right?
Credits.
Of credits, right? I mean, so these are very, very expensive things, hence why to make these affordable at this point in time. And even the supply, I understand, is extremely limited.
Yes.
Right, so hence the idea that we need to onboard these, right?
Yeah, but if you look at just this example alone, you realize that it is actually the power of an entire ecosystem coming together, right? You have the actual guys who are using and producing the actual technology solutions, using them, people who are able to have the expertise to account for it, account for the carbon, creditize it, be able to certify, be able to project rate, be able to sell on, innovate on the kind of bundles that you're talking about. So really it takes an entire ecosystem, right? And what other parts of the ecosystem have you been seeing that is absolutely critical to success and for scaling the markets?
I mean, there are so many. I think we have a couple of the examples here. So when we first came to this, and again, in the mindset of how do we create trust in this, some of the first thing that becomes obvious is you need to have an element of what does quality look like. So rating agencies becomes a natural first place that you need to have in this. But more fundamentally, perhaps, it's also just about having the right science. And I'm so impressed with some of the science that's going on right here in Singapore. So you know that we did some work in US right here in Singapore and some of the other universities. If the science is wrong, everything else is wrong, right?
Yes,
and then
absolutely.
the rating builds on that. But also, I think, let's be honest about it, there's still a lot of education that is needed in this space here. So just for example, yesterday, we announced a training program here in Singapore with a university. Again, just to make sure that we get all the accountants trained, all the lawyers trained, all the traders trained. There's a whole community that needs to be built around that. So that's the third email. I don't know if you pick up on some of that.
No, it's true. So we spoke a little bit about trust, transparency. So in order to have high credibility and trust, it is particularly important to have quality assurance, if you like, on the kind of projects that we are developing, which is why, in a sense, MRV companies, the ones that do monitoring, reporting, and verification, become very important. So in the monitoring, reporting, and verification space, I think that there are about 4 key elements, the 4 Ps, really, if you like, that makes for successful quality assurance, right? One is, the first P, precision. You need to be precise, and that has to be backed up by science, right? You got to know what you're measuring and measure it well. The second part of it, I think, is persistence. Today, verification is an extremely laborious manual process. And you therefore have to sample, you have to do it infrequently. But if you are able to monitor and report more frequently, you increase the level of trust and transparency. The third P is really about being pervasive. So when we want to scale, we are talking about large projects, even in nature-based, right? If you're talking about tens of thousands of hectares, hundreds of thousands of hectares, you need to be able to have that kind of wide area coverage and not just look at pieces at a time. And the last P really is about price. We have to make sure that the way to introduce transparency and trust is also cost-effective. We don't want to layer unnecessary administrative costs over these things and return more of the economics to the project developers and the local communities. And then, leads me to an actually interesting thing. You remember last year, we collaborated with DBS, Google, and others to run the SustainTech Accelerator. And out of that accelerator program, where we had 5 finalists come to actually the last edition of Ecosperity, I'm so happy to actually say that 2 of the finalists are people that we are working with or invested in, right? So one of the Sol MRV companies, previously known as Cloud Agronomics, is now a Gen Zero and Temasek portfolio company, and you are working with one of them.
We're working with Solvera, the rating agency. They're one of our very first partners. And I actually know that 2 other ones of them, one of the other partners who was in the program has adopted them. So 4 out of 5 actually got a chance at this. So I'm pretty impressed with it. But it reminds me of, when we talk about where they came from, I think there's about 300 people coming to this, or 300 applicants of 50 different countries. So it just tells you about the appetite out there for these new technologies, right?
Yeah. So I think that I heard that the second edition of this accelerator program is about to start soon. So please keep a lookout, really. Yeah. So keep a lookout for more details that will come from our DBS colleagues who will be lead organizing the second edition of this accelerator program. And I understand that it's going to be in a very, very interesting and relevant area for our work. But time is about up. Let me round up by perhaps asking you, Mikkel, if there is one thing that you want to leave with the audience in terms of the critical takeaway for how to create success and to scale the markets and the work that we are doing, what would that be?
Well, I think if I had to boil it down to one word, I would choose execution. We've spoken a lot about quality and standards, but we heard from the previous panel, a lot of this is falling in place, and I think the time is now to be brave and just move ahead. Because we can get paralysis from now on next 5 years, getting caught up in absolute perfections.
Yes.
But the timing is now. We're going to try and solve some of these problems. We have the technology, we have the standards now. Let's just get on and do it. And I think this is where we really have an opportunity in Singapore. What do you think?
No, I agree. Earlier on this week, when we launched Gen Zero, we talked about the emissions gap that we are likely to see by 2030, right? About 19 to 26 gigatons of an emissions gap to be able to keep us to a 1.5 degree pathway is a massive gap, right? And we got to start to take action now. So near-term action, rather than worrying about what's going to happen in 2050, is absolutely critical. So I would say that my final takeaway would be, let's be optimists, but with a good and healthy dose of pragmatism. So we try not to let perfection get in the way of good enough. So nothing is going to be a perfect solution right now, not for credits, not for our tech solutions, not for nature-based, but it is so important to take action now rather than wait for the perfection wait for perfection to come. Right, with that, thanks a lot, Mikkel. Great talking to you.
Good to see you.
All right, man, buddy.